Joining us now to provide some insight is Shawn Hackett. Mr. Hackett, hello, sir.
Hey, Paul, always a blast to be on this show in Iowa talking agriculture, weather, and prices.
The weather. We could talk about the weather all day, and let's talk about the harvest in the wheat market first. Then we'll get to the weather in the other markets. We're about 81% complete, according to USDA on Monday. Is this harvest pressure on the markets when it comes to wheat?
I think it's more harvest pressure from the Russian harvest because that's the record crop that's coming. That's where the big exports are starting to kick in. Of course, is Ukraine starting to make some shipments. Psychologically, doesn't help the market. I think we're done with the harvest pressure domestically. I think it's really overseas that we need to get through a little more of that before we can see that back off.
So is wheat the biggest, not going to say benefactor because that's not what you're saying, the loss is going to be impacted the most by these ships starting to leave Ukraine?
Well, I think it has been impacted. I mean, remember, we came from 14 all the way down to under $8. So when you look at a percentage decline, wheat has been the biggest one that's been hurt by these psychological shipments that may get larger. We're trying to figure that out. No doubt. But, you know, that's old news now, priced into the market. We always need to look ahead.
So, looking ahead, where are we headed?
I believe the grain markets as a whole, including wheat, are carving a bottom here in August. We think most of the bearish news on strong dollar, bearish macro, bearish picture overseas has all been factored into this big decline, and we think we're getting to a point where the market is going to start to price in some less bearish news ahead.
Is it double-digit news ahead? I mean, are we going to be back over 10?
Well, when I look at the wheat market, I look at the drought that's in the winter wheat areas, and I look at what's planting is going to be coming up here in September and October, and I'm really worried we're not going to be able to get that crop planted the way that we need, and that could be the next major catalyst that takes this market and puts some weather premium back in.
You've had a chance to survey some of the corn market here in Iowa this week. Those that live it see it out their back door. You drive by it at 80 miles an hour, it looks the same everywhere. As I said to you before we taped, the lawns are the only thing that's different. What's really out there right now in corn?
My impression of the crop, and it's always based upon temperature, because temperature is the most important factor in determining whether yields can make trend or not. We've been too warm this summer, yet again, over 2 degrees above normal. That means trend line yield crops are not possible. Still okay, not the worst crop ever, but not a trend line yield crop. Something in the mid 170s, but that's not enough to put big ending stocks back in to the U.S. supplies and put that buffer stock that we've been lacking for the last couple of years. That means to me, once again, like wheat, the corn market's going to be carving itself a low here as we move to the other side of this.
Carving a low. How much more low do we have before we hit the scalpel's edge? I
think that mass liquidation event that we had, that big macro where all the speculators were selling and everything was crashing, and we got corn in that mid-5s, 560 area on December corn. I really feel that mid-5s area is going to be very hard to find a reason for the market to spend much time below that.
Are we going to be able to get back up to 7 on corn on new crop?
I think there's a really good chance that we will. With the lack of building stocks here in the U.S., La Nina is still with us. It's hanging on. We know it's not been kind to South American crops the last 2 years. We're going to have some of those tentacles coming in there in the first third of the growing season. The market's going to worry about all of that like it has, and I think that puts some weather premium back in and provides a reason for that kind of a price level to be had.
We have a question that came in, Shawn, via social media. Greg wrote to us via Twitter, and you're always welcome to do it, at MarketToMarket. Shawn, he wants to know, for those of us with a few gambling bushels left, should we close our eyes and just sell it, or be ready to pile new crop on top of it?
Well, as you know, Paul, the last time I was on the show on April 29th, I was a bear. You know, I'm usually more optimistic about things, and I said the time to really make sales and get the job done was in May. I don't believe the time to make aggressive sales is now, unless you absolutely, positively have to do it. What your question is telling me is someone who doesn't actually have to sell, he can hold off for a while and wait for some better times. I don't believe selling here in August is going to prove to be a good time to monetize farm income.
So you could be telling those that did sell everything and had nothing left to sell, you probably made the right decision.
Everyone who has sold at higher levels, you've done very well, yeah. And I think you made the right move. But if you still have some, and you know, farmers always have some, you know, they didn't know the crop size, all that sort of thing, I think you're going to get a better opportunity in the fall to do something smarter.
The Chinese were interested in U.S. grain. The bean market jumped dramatically on Thursday, but we had dug ourselves a pretty big hole earlier in the week. Why?
Well, we had all this heat that was supposed to come in. We talked about this before the show. 105, 110 degrees, and then all of a sudden the weather models backtracked and said, nah, mid-90s. And the difference between a mid-90 temperature and 105 temperature for soybeans during pod filling in August is dramatic. That took a lot of that excitement off the table. At the same time, when we talk about what's going with Taiwan, Pelosi's visit, the geopolitical things that are going on there, if they're ultimately going to go into Taiwan, and let's say that that's what they're ultimately going to do, I would think they're going to want to get their inventories up really high before they do.
But why does that rumor come out? I mean, the speaker had barely been gone from Taiwan, and all of a sudden there's this whispers of Chinese is buying. That's an actions word thing there that was confusing to me.
I always say, don't listen to what the Chinese say. Always watch what they do. They said a lot of things on TV, but what they did was they bought U.S. grain. I think that says a lot about where they're really at.
Okay, so they bought it, but normally if they say they're going to buy, the market rallies. But if they're trying to buy, they don't want to buy a rally. They're trying to say, now we're not interested.
I think they're aware that U.S. crops are not going to be as good as they should have been. And I think they're aware of their intentions. I mean, they probably have a much better idea what they're going to do with Taiwan than I do. And if they have looking at longer term and thinking, we're way off from the highs, Paul. These are some of the best prices we've seen since last year. Why not start making some bids now while the getting is good?
All right, so are you seeing a rally coming in our future here for new crop beans?
I do.
How big?
I think the soybean market, can rally, I think, a couple of dollars here from where we are. I mean, we already had almost a $2 rally on the hot, dry weather. You could see how quickly this market was willing to respond to anything going wrong. We get anything going wrong in South America at all with a short soybean crop here in the U.S., it wouldn't take much to think we could put that premium right back on.
All right, we're in a bearish trend in the cotton market. Is that going to continue?
The U.S. crop looks so bad, and the Indian crop is looking not as good. I just don't see how this market, even with the worries over end user demand because of the economy and all the slowing down and all that stuff, I just don't see how this market's going to find a way to go below 85 cents where it's already been. I think we're going to find that the demand will be good enough there to handle the lower demand that's coming. So, hurricane season's coming. Lots of times we get weather spikes during hurricane season. It's been quiet so far, but August 15th, to early October fires things up. Wouldn't surprise me if we could get some of that volatility to the upside here.
We'll get your dairy take in Market Plus. I want to move to the cattle market. Is this a seasonal rut that we're in, or is this only responsive to grain?
Well, certainly the feeder cattle market, obviously clearly reacting to lower corn prices that we've seen. But when you look at the chart of the fats, we're actually broke over at 149 in that December contract, which was really an important benchmark for us on the charts. Looks to me like we might be shifting finally from this herd liquidation cycle that we've been in forever to maybe moving into this herd rebuilding cycle that takes these animals off the market while demand is looking for it. And maybe, just maybe, the cattle producer is going to get the upper hand against the packers.
Did you just review your April comments and say, because you said, if I remember correctly, Shawn, August you see a rally in livestock, and here we are. We've had a rally in livestock. What's the rally? Which one's going to have a bigger rally, the feeder market or the live cattle market?
The feeder cattle market always has the bigger rally at the beginning of a major move in the cattle complex when you're going through herd rebuilding cycle, and it has outperformed, and I think that will continue to be the case. The second half of a move in the cattle complex, the fats take over the leading edge. So I still think if we're looking at performance, the feeders are still going to be the supercharger here for a while.
What about these sales of hogs to China and Mexico? What's that mean for the hog market?
Well, it's good news. We looked at the hog price in China. I think we mentioned this last time, and it's been continuing to strengthen. We looked at copper prices in China, strengthening. Lumber prices in China, strengthening. So although we've been worrying about demand from all this shutting down of these 500 million people, the domestic prices are beginning to say demand's coming back. Like we should expect to see a resurgence of demand for things like pork, meat proteins, and chicken. And I think that getting that Chinese demand back when we still have very low animal feeding units based upon the last numbers from the USDA spells a good tailwind for higher prices heading into the fall and into the fourth quarter.
So we have the story about the trade deficit reducing. Food was a big part of it. Food stuff, what we produce in grain country. but also what we produce in the livestock country. Global exports, you say, higher. What's about the domestic demand? Because let's talk about the chicken wing. That has fallen in half. You mentioned lumber. That has fallen dramatically. What's our domestic demand in 30 seconds going to do here in the rest of 2022?
The market has already priced in a much weaker U.S. demand story. I believe that is the past. When I look ahead and I look at what I'm seeing from leading indicators like copper, like the inverted yield curve, and what we heard from the Federal Reserve, that they're going to now be on more of a data focus, I think we're looking at a better looking outlook for demand going forward than we currently priced in.
Shawn Hackett, thank you so much.
Thank you, Paul.
Appreciate the time. I'm going to put a pause on him for just a moment because we're going to keep this analysis going and talk to Shawn and answer more of your questions. It's right over here that you submitted for our Market Plus segment. You can find that on our website of MarketToMarket.org in both podcast form and also on YouTube. By the way, all of these resources, they're free. And speaking of podcasts, because that's what you do in them, you